Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Meta's stock so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 820 billion market cap. They're trading at $3.20 a share, and they have 2.6 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They're truly a cash cow. They generate tons of free cash flow. It was highest in 2021 at 39 billion, but it's still pretty high in the trailing 12 months, 17 billion. They are investing a lot back into their business to grow it, which is why it's a little lower the past couple of years. They don't pay a dividend, but they buy back tons of stock, which is just as good as a dividend because that boosts your stock price. So either they give you cash, which is dividend, or they increase your stock price, which is stock buyback. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was almost 40 billion in 2021. It's currently 22.5 billion. Revenue is a sales for the company, and that's grown 50% from 85 billion to get this over 120 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.2 trillion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1 trillion. We divide that by 2.6 billion shares. And we get a calculated stock price of $391. They're trading at $320, so they're trading at an 18% discount. It's a pretty strong buy according to the model. As you probably know, I'm pretty bullish on Meta. So I'm pretty sure the AI boom is going to boost the stock even more. There are 62 companies in the same industry as Meta, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend the most in CapEx out of all the companies, more than Google. They have a good debt to equity ratio of 0.2. For every dollar of equity, they have 20 cents of debt. Generally, tech companies don't have a lot of debt. There's not as much infrastructure needed for the business. Like an oil and gas company would need a lot of debt. Same thing with a telecom company or a manufacturing company, because those types of companies need a ton of CapEx for their business to work. They generate lots of free cash flow, second to Google. Google is the biggest company by far. They're a distant second. Then everybody else is far behind them. Their price multiples are getting worse as their market cap goes up, but it's still not that bad. A PE of 36 is not that terrible for this company. Companies that are growing their revenue as much as Meta is sometimes have PEs in the hundreds or thousands. They generate lots of revenue, second to Google, and they're growing a lot, 21%, their 5-year annual revenue growth rate. Look at Snap, 38%. Twilio is 55%. Google is pretty high as well at 19%. That's the average, 19%. Their stock is up a lot today because they released earnings last night and they beat revenue and earnings, both by 3%. The expected earnings were $289, they reported $298. The expected revenue was $31 billion, they reported $32 billion. Last quarter, the same thing, they beat revenue and earnings. But the 2 quarters before that, they missed on earnings, and their stock price fell below $100. Now it's trading north of $300. Let's take a look at their second quarter earnings slides. They reported earnings Wednesday night, July 26th. I'm making the video on July 27th. You're probably watching it on July 28th. We had a good quarter. We continue to see strong engagement across our apps, and we have the most exciting roadmap I've seen in a while. With Llama 2, Threads, I'm sure you're all familiar with Threads, Reels, new AI products in the pipeline, and the launch of Quest 3 this fall. 32 billion of revenue for the quarter, up 11% from the same quarter in 2022. Expenses of 23 billion, operating income of 9.4 billion, which is up 12% from last year. Since their revenue went up more as a percent compared to their expenses, 11 is higher than 10, that means their margins increased. Although when you round it, it's the same, 29%. But if we moved it out of decimal, you would see this quarter they have higher margins than last quarter. Net income of 7.8 billion, up 16%. EPS is up even more. EPS is up 21%. How could EPS increase more than earnings? It's the same number. EPS is earnings per share. Net income is total earnings. I'm sure you guessed the reason. They have less shares outstanding this quarter than last year, so their EPS is a lot higher. Across all their apps, they have 3 billion daily active users. The world population is 7.9 billion. 3.9 billion monthly active users, which is half the world. So half the world uses their applications at least once a month. That's an increase of 6% year over year. They have 3 billion monthly active users in Facebook alone. That increased 3% year over year. They're still growing outside the US. Inside the US, they're probably regressing a little bit. But Instagram is growing a lot inside and outside the US. In just this quarter alone, they bought back $800 million of common stock. That brings the total buybacks up to $41 billion. Over 99% of the active businesses in the United States are smaller than $41 billion. So just in the excess funds that are remaining, they could buy out almost any company in the world. They always keep a lot of cash on their balance sheet, $53 billion. Free cash flow for the quarter is $11 billion. Long-term debt of $18 billion. But when you have $53 billion of cash, it's like you have no debt. That's like if you have a $100,000 mortgage and $300,000 of cash in investments. You're paying such a low interest rate on your mortgage, you don't see much of a reason to pay it down. But you could pay it down if you wanted to. That's like them. They could pay off all their debt if they wanted to, but they don't see much of a reason because they can use that cash and get a much higher return than they're paying on the interest on their debt. They are cutting staff. They're down to 71,000 employees, a decrease of 14%. Let's take a look at their income statement. $32 billion of revenue. For the trailing 6 months, $60 billion, up from $57 billion. All the expenses directly related to generating the revenue of $5.9 billion, R&D $9.3 billion, marketing $3.2 billion, general and administrative $4.2 billion, expenses of $22.6 billion, operating income of $9.4 billion. They spent only $99 million of interest on their debt, income before taxes of $9.3 billion, taxes of $1.5 billion, net income of $7.8 billion. So their EPS is up a lot. It's over $3. Last year was $2.47. The reason their EPS is higher is because they have 2.56 billion shares outstanding. Last year was 2.7 billion. So they're spreading the 7.8 billion over less shares. When you compare it to last year, they were spreading that amount over more shares. Let's take a look at the balance sheet. Current assets of $70 billion. Current liabilities of $30 billion. So their current ratio is above 2. Lots of cash, $29 billion. $25 billion of marketable securities, which are pretty much cash. So that's like $53 billion of cash. $12.5 billion of accounts receivables. This is how much money others owe them for buying on credit. Prepaid expenses of $3.6 billion. This is when a company makes an advance payment for a product or service they're going to receive in the future. You could think of prepaid expenses as the opposite of deferred revenue, because the other company may carry it on the balance sheet as deferred revenue. But according to Meta, it's an asset, so they have to put it in the asset section. The other company puts it in the liability section. They have lots of property and equipment, $88 billion, $21 billion of goodwill, so total assets $207 billion, up from $186 billion. In current liabilities, accrued expenses of $25 billion. This means they incurred an expense but haven't paid it yet. They only have $18 billion of long-term debt. That is double from last year. Total liabilities $73 billion, up from $60 billion. You can see how profitable they are. They raised $69 billion from selling stock. They profited $68 billion from running their business. Retained earnings would be a lot higher if they didn't buy back so much stock. Let's look at the statement of cash flows. We'll first look at operating cash flows. This is how much cash they generated from their operational business. We start with net income. Net income is your accounting profit or loss. It's not actual cash. That was $7.8 billion. Then we have to add back the non-cash items on the income statement, then adjust for changes in working capital. They actually generated $17 billion of cash flow for the quarter, much higher than last year of $12 billion. In their investing section, they had a cash outflow of $6 billion from the purchase of PP&E. They don't do much acquisitions. They only spent $83 million in acquisitions. In the second quarter of 2022, $360 million. They paid $1 billion for Instagram in 2012. Instagram was launched in 2010. A lot of people, including me, consider that the best acquisition ever. Meta is worth $800 billion, and IG is one of their most valuable assets. It's probably worth around $40 billion, so they 40x on that investment. If you invested $1,000 and 40x on that investment, you'd have $40,000, which is pretty sweet. You'd be really happy. But it's not life-changing. If you scrounged up $100,000 and invested that, and 10 years later, you had $4 million, that's pretty significant. That's life-changing for most people. I'm not saying you could retire, but your quality of life drastically changes when you make $4 million on a $100,000 investment. In their financing section, they bought back $900 million of stock. Last year, over $5 billion. It's good they spent so much money last year because at one point the stock was below $100. The stock has more than tripled since the bottom. Here's a breakdown of their revenue. Of the $32 billion, pretty much all of it is advertising. Advertising on Instagram, Facebook, all their apps. They did generate $276 million from the metaverse, which is down from last year of $452 million. So that was a big bust. If you invested $10,000 into this company 10 years ago, you'd have $80,000 today. That's a 700% return, a 23% annual return. But at one point, your $10,000 would have been close to $100,000. Let's look at the company on Simply Wall Street, trading at $300. This was as of yesterday's closing price, $750 billion market cap. So they added $50 billion in value overnight. The stock is up 86% in the past year. Meta has products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and wearables. They operate two segments, Family of Apps and Reality Labs. The Family of Apps segment offers Facebook, which enables people to discuss, share, discover, and connect with interests. Instagram is a community for sharing photos, videos, and private messages, as well as feed, stories, reels, video, live, and shops. Messenger, a messaging application for people to connect with friends, family, communities, and businesses across platforms and devices through text, audio, and video calls. WhatsApp, a messaging app that is used by people and businesses to communicate and transact privately. Reality Labs has virtual reality products that consist of consumer hardware, software, and content that help people feel connected anytime and anywhere. They were known as Facebook and changed its name to Meta Platforms in October 2021. They were incorporated in 2004 and headquartered in Menlo Park, California. The two risks they list is profit margins are lower. They were 31%, now they're 18%. And there's been insider selling in the past 3 months. I bought the stock at IPO back in 2012. And from 2012 to 2021, the stock pretty much only went up. Then they had a really big sell-off. And everybody was saying Meta's going to go out of business. Now people are changing their tune, saying Meta is amazing. You got to buy the stock. When the stock price goes down, most of the market is bearish on the company. When the stock price goes up, the company's amazing and people become bullish again. Simply Wall Street's valuation is $430. They say the stock is 31% undervalued. 51 analysts priced this stock and the average price target is $306. They say the stock is 2.5% undervalued. Their trailing 12-month revenue in 2012 was $4.6 billion, and that's grown exponentially up through 2022, getting up to $120 billion, which is pretty close to where it is now at $117 billion. Their 2023 revenue forecast is $127 billion, 2024 $141 billion, 2025 $155 billion. The red line on this chart is their debt, and they're usually debt-free. They did add a little debt recently, but it's almost nothing compared to their cash balance, which is the green line, $37 billion, and their equity, the blue line, $125 billion. Their debt-to-equity ratio is only 8%. I'm not sure if you heard of this guy, Mark Zuckerberg, but he's the CEO of this company. His salary is $1. Total compensation, $27 million. His tenure as CEO is 19 years. He's been with the company since the beginning. In the past year, only insider selling, no buying, mostly by Andrew Bosworth. Andrew Bosworth is their Chief Technology Officer since 2022. He graduated from Harvard in 2004. He's been working with Mark Zuckerberg since 2006. So he's been with the company a really long time. Zuck took a class at Harvard and Boz was a teaching assistant. That's how they met. 65% of the companies held by institutions, 21% by the general public, and 14% by insiders. Zuckerberg is the biggest shareholder at 14%. His valuation is over $100 billion. They only had 4,300 employees in 2012. That grew to 87,000 in 2022. It's been coming down a bit. It's 77,000. And the ticker trades all over the world. The Nasdaq, Deutsche Börse, Xetra, Mexican Bolsa, Santiago Stock Exchange, Swiss, London Stock Exchange, Lima Bolsa, Borsa Italiana, the Wiener Bourse, Kazakhstan, Ukraine, Bulgaria, the BATS Europe, Sao Paulo Bolsa, Buenos Aires, and the NEO. So that's the end of the video. Let me know what you think. Give it a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.